Frank Sorrentino. He's founder, chairman, and CEO of the New Jersey-based ConnectOne Bank. He has a $1.4 billion market cap, up close to 7% so far this year. Welcome back. How are you?
I'm doing great. 26 is a great year ahead of us. I really believe. A lot of people said, survive till 25. Well, here we are. It's 2026, and things are looking really up. So very confident about what's happening.
Well, as Carol mentioned, it's not just you guys betting on the U.S. Spain's largest bank betting big on the U.S. We already have foreign banks here. What's your view on the deal? What's the competitive landscape for the U.S. and like for business?
Look, there's a lot of consolidation going on in the U.S. markets for financial institutions. The United States is a sort of a rare breed across the globe where we have some 4,300 banks today, which you don't find in most countries. And so there's a natural consolidation going on. We have a very, very accommodative administration and regulatory agencies that are allowing for some of those M&A activities to take place. And, notwithstanding what everyone would like to say about the U.S. and all the headlines and whatnot, there's a lot of foreign capital that wants to find its way into the United States. And so when you see a deal like this that you just announced, clearly that's foreign capital moving to make an investment here in the United States. For banks like ConnectOne that are in the market in the region that Webster was in or is in, we see that as a boon for us.
Why?
Well, anytime there's consolidation like that or a merger, clients get impacted. The ability to do certain types of loans may go away. Certain products get phased out or whatnot. There's a lot of turmoil in that wake, and so generally smaller banks are there to pick up the pieces. And so we're excited to see this transaction take place.
We've asked you in the past about M&A, mostly from the perspective of you going out and buying other banks. What about bigger banks coming knocking on your door? Does that happen?
Listen, it's always, I've said to our investors, our everyone, where, our job is to continue to make ourselves unavailable to be sold. But certainly that's always a possibility for every institution, and it should be for every company, right? It forces you to run your company in the best way possible. But, certainly there's always that opportunity out there.
Did you say availability to be sold?
Always. Every company should look at their business plan and their model, looking at what value. If you want to talk about a value of a company,
right?
The value is what someone's willing to pay you for it, right?
Right.
So how do you set the company up to be the most profitable, the best company in your market in the products that you provide? And if that's true, there'll always be someone interested in an acquisition.
But sometimes you have to spend money, right, to do a strategy that pays off longer term.
When I say profitable, it may not be financial profitability.
Okay.
Are we creating value?
Yeah.
And so, one of the things I'm the most proud of, we've been at ConnectOne 21 years with pretty much the same management team, and we've created an enormous amount of value over those 21 years, and no one's been able to buy us.
Not yet.
So, that's right.
But you're open to it.
As I said, I think everyone should be open to that.
We were talking with our team here.
By the way, you just saw it in the transaction with Webster, right? That was a fantastic company, well-run, well-managed, great markets, and someone offered them, a price they just could not refuse.
I mean, what's fascinating, I think, around us, we used to have a bunch of retail, and then they left. And two banks have opened up. Citibank across from us is a Capital One. That's like downstairs. A cafe and so on and so forth. It's not retail that's coming in. I just feel like banks are popping up. I mean, banking has been a pretty good business for a while.
Yes.
Especially the last couple of years, it feels like.
And I think it will continue to be.
And is it because of the consolidation, or is it?
Well, that's part of it.
What is it that's really juicing it?
Look, part of it certainly, if you have less banks, it's you're going to first off you're going to have bigger banks that have bigger balance sheets and the ability to provide better products and services, and that's more desirable. We're also seeing, at the ground floor, all of our clients are getting bigger and smarter and more sophisticated, and so they have needs for more financial products. So not to dismiss, the small community bank that doesn't have a lot of that product and service set, but what we see here, certainly in the New York metro market, our clients are getting larger, they're getting bigger, they're entertaining M&A, and so they're leapfrogging in size, and so they need a bank that can continue to service their needs. And so part of our growth strategy, it's we want to create value and we want to grow our earnings and all that other stuff, but I also recognize if we're not growing ConnectOne, we're not going to be able to satisfy our clients' needs as they're growing. And to me, that's an incredibly important part of our organization.
One of the reasons we like to talk to you is because you have a great view on small business, specifically on construction, on builders. That's sort of the DNA of your bank. You've been really consistently, quarter after quarter, at least with us, optimistic about that demographic that you serve. Does that optimism remain today?
Yeah, nothing's really changed in my view, and through the clientele that we have, relative to when we talk specifically about construction and probably in multifamily and industrial, warehouse and manufacturing and those areas, there's just not enough product on the market. And when it comes to apartments and homes and condos, we are so woefully short, specifically here in the New York metro market, that I don't think you could build enough to satisfy that in any short period of time. So to say I'm optimistic would be an understatement.
Well, what do you make of the story? I mean, we were watching home builders on the move this week, and this is, was it Lennar, and I forget who else, that has apparently approached the administration about building affordable homes. They call them Trump homes, including private investors. It sounds like there's a lot of details to be worked out. I don't know. How are you viewing something like that? Does this kind of make sense as maybe a first step to figuring out a strategy, or does it? I don't know.
Yeah, so the answer is yes. It's a great idea to think about affordability first, relative to, new homes, home ownership.
And it's rent to buy, I think is the strategy.
Home ownership is great, all these other things. Yeah. But, the real impediment and the reason why we don't have enough homes today is not because of capital and it's not because of bank lending. There's political change that has sort of crept into the system. You just can't build. You have to, between environmental issues and, the parochial town by town issues, zoning issues, insurance needs, whatever it is, creating this environment where it's just difficult to build. So unleash the ability for builders to build, and you'll have affordable housing.
Well, our producer Talia has got one eye on the show and one eye on what Bill Pulte's saying on Fox News right now, Fox Business. He's actually saying he's the head of Fannie and Freddie, not actively looking at the Trump homes idea. He's saying this on Fox Business as we speak.
So come and go pretty quickly.
Well, that's just one. One voice there.
But an important one when it comes to certainly the housing market.
You guys, you're talking about housing, and you got me thinking about infrastructure, and maybe it's because we're seeing this right now in the midst of sort of unprecedented or historic freezing weather here in New York and challenges that are associated with that. But you've got a lot of big players betting big on infrastructure right now. Are you able to play in infrastructure at all?
Most of it's bigger than what we can manage, but I would agree that there is so much need for infrastructure build. You drive on any road, go across any bridge. It's really I use the subway often here in New York. I mean, there's clearly a need for infrastructure spending just about everywhere.
But it's right now that's a little too big of a swing.
Generally, those things are they're beyond our balance sheet capabilities.
We've been talking kind of macro and big.
But hold on, however, all of that infrastructure, I'm excited. That's part of my speech too. All that infrastructure capital that's coming in, when they repave the turnpike or they build a new section to the subway or build any of these products. Think about it. They all need shovels. The workers all have to go to the deli. Yeah. They all need their clothes cleaned. They all need to buy shoes. And those are all the businesses that ConnectOne supports.
So economic velocity,
infrastructure,
right?
Infrastructure spending is great for the economy.
All right, what about President Trump's new choice of a Fed chair? Will he be potentially great for the U.S. economy?
Look, he's an interesting choice based on what everyone expected. I think he's the exact opposite of what everyone expected would actually happen. And if you look at his history and what he's focused on, the thing that I like the most is that he is data driven. And I've said those words on this show often. I think the Fed needs to look at the data and make decisions about what they're going to do with our money supply. You've heard me speak many times on this show about that interest rates maybe aren't the most important thing we need to be focused on, but the Fed balance sheet is. And very few people want to talk about that. He wants to talk about that, and he is saying that Fed balance sheet is too big. It needs to be reined in. It is causing market distortions, and really interest rates can afford to be lower if we get the Fed balance sheet under control. And I happen to absolutely agree with that position.